Hey everyone, welcome back to Money Mastery Hub. Today, we've got an exciting topic for homeowners looking to leverage their home equity. We're going to discuss the ins and outs of getting a home equity line of credit, commonly known as a HELOC. Stick around because by the end of this video, you'll have a clear understanding of the process. So what exactly is a HELOC? A home equity line of credit is a flexible loan that allows you to borrow against the equity you've built up in your home. Unlike a traditional loan, a HELOC works like a credit card. You can borrow as much as you need, up to a predetermined limit, and pay interest only on the amount you use. Before you jump into the application process, it's important to determine if you're eligible for a HELOC. Lenders typically look at your credit score, income, and the amount of equity in your home. A good credit score and a significant amount of equity will increase your chances of approval. Now that you know you're eligible, it's time to research lenders. Compare interest rates, fees, and terms from different financial institutions. Don't be afraid to negotiate. Sometimes, lenders are willing to adjust terms to secure your business. Ready to apply? The application process for a HELOC involves submitting financial documents, like proof of income and home value. Some lenders may also require an appraisal of your home. Be prepared for this step, as it's crucial to determine the maximum amount you can borrow. Congratulations, you've got your HELOC. Now, it's important to manage it wisely. Remember, you're using your home as collateral, so only borrow what you truly need. Make sure to keep track of your spending and consider setting a repayment plan to avoid accumulating excessive debt. And there you have it, a quick guide to getting a home equity line of credit. If you found this video helpful, give it a thumbs up and don't forget to subscribe for more financial tips. If you have any questions or want us to cover a specific topic, leave a comment below. Thanks for watching, and we'll see you in the next video.